Monday, May 6th, 2019, Maneco 64, home of alternative economics and contrarian views. So here in the UK, it's a bank holiday, but the markets are open. Beautiful day today. It's still fairly cold for this time of the year. Billy's just been out in the garden. He's a bit excited. He was playing with a toy, and I called him up to be on the sofa and participate in the video. He has to earn his keep. Some big developments in the markets overnight. The big headline, I think, that's impacting the markets this morning is this one here. Trade deal dead. Trump says 10% China tariff rising to 25% on Friday. Another 325 billion in goods to be taxed. So that's out there. If you remember well, these trade negotiations weren't going well, in my opinion. They were supposed to have been completed by March 1st this year. They weren't. So they extended it. It was delayed, and here we are in May, and it looks like it's a dead deal. So the markets, stock markets are moving lower quite a bit, and I'll look at that in a minute. We've got another headline: S&P futures plummet as China set to cancel Washington trade trip. All eyes on S&P 2,890. So that was a key resistance there that the market had broken on the way up. So what do I think about this? What's going on between the U.S. and China as it relates to trade? Well, you would think that a president that wanted to keep the stock market so elevated that he would try harder to, not to kind of break, negotiations like this. You'd think he'd know the impact on the stock market, or maybe it's the fault of the administration to have kind of made the trade deal like something that the algorithms look at for the stock market. Don't forget, last Friday we had the jobs number, which were really great. The statistics. The market rallied quite strongly. So this morning, it's gone the other way. Let's quickly look at what the markets are doing here right now. We've got spot gold actually off the highs. Gold got up to 1286. It's now at 1281. It's only up 2.5. So we were up about over $7. Silver is down 7 cents at 14.85. The high's been 14.99 and the low 14.83. Right now, the Dow future is down 455 at 26,050. It has been down as far as 26,550. So it was down over 500 points overnight. Right now it's down 1.71%. S&P is at 28.95, down about 49 or 1.67%. The low has been 28.81, so it's been down 14 points lower from here. So we have rebounded a little bit. I guess the London boys are coming in here. Maybe the people that manage the Treasury's account in London for the ESF are in, and by that I mean JP Morgan. I remember many years ago when John Snow was Secretary of the Treasury under Bush Jr. or Shrub. There was actually a photo of him in the newspaper when he visited London at the offices, at the trading room of JP Morgan, and you kind of wonder, the U.S. Treasury Secretary meeting the traders at JP Morgan London. So that's a little bit of anecdotal evidence there for you. NASDAQ 100, 76.87, that's down 150 or down 2%. It has been down lower, 76.52 is the low. So not great, the stock market. This is on the back, of course, of the headlines. Let's have a look at quickly have a look at the charts now. S&P. So you can see here that unless things change, this is not looking good. This is a weekly S&P chart. You can see that there that we've had these rising wedges, and it's clearly showing here that we're breaking below the support. Yes, the S&P did trade at all-time highs last week, but this is not boding well. I'm sure a lot of momentum traders got on the bandwagon buying the S&P, and I think that they're the ones who are probably selling off this morning or overnight. They're the ones getting out. What about the Dow? Let's quickly look at the Dow. Dow is the same thing. I haven't really drawn the wedges here, but yeah, that was always the worry, that the Dow never made an all-time high, and that's kind of a non-confirmation, seeing that S&P and NASDAQ did. What about the NASDAQ chart? Yeah, NASDAQ 100. Now we're breaking back below the all-time high from September last year. Not good. It will be interesting to see, though, if this is going to continue. We know that things can change fairly quickly once the U.S. comes in. You get the open in New York at 9:30, and all of a sudden the market squeezes higher, or it could go lower. It's very interesting here because I think people had gotten a bit complacent. People thought that the markets couldn't go down anymore, but here we are. As I said, this is early days still. What about the currencies? Well, we're seeing mixed moves here. We're seeing the pound drop quite sharply. It's down 0.5% at 131.16. The euro is down only 0.1% at 111.90. And the dollar, though, is down 0.33% against the Japanese yen at 110.73. The dollar's up quite substantially, not surprisingly, against the Chinese currency, the yuan. It's up almost 1% at 6.79. Crude oil. Crude oil is getting hit, of course. It's at 60.63. It's down 2.2%, or $1.40. That's WTI. Brent is down just over 2% as well at 69.22. And just have a look at the crude oil chart as well. And this is a weekly one. You can see here that when the stock market bottomed in December, crude oil also happened to bottom. Crude oil had been coming down as well in the same period from October to December. And in the rally we've had in crude oil has corresponded with the rally in the stock market, but it didn't even manage to get back to those prior levels. Around 75, and now it's failing again. It's coming back down. That's another indicator that this stock market could be in for a rough period here, because it seems to be trading in conjunction with crude oil. What about the bonds? Bonds are fairly quiet actually right now. Yeah, the 10-year yield is basically unchanged at 2.52%. The 3-month to the 7-year is flat. And I would say the bond markets are going to be a little quieter in the European hours before the US comes in, mainly because London is on a bank holiday today. There probably will be people in the offices, but it won't be as busy. It will be like a skeleton staff. Just have a sip of my coffee. And the Fed mug. You can get these, of course, and other merchandise, Billy mugs, in the Maneco 64 store, Teespring store. All the details are below in the description. Let's have a look here at this story, the trade deal story. Trade deal dead. Trump says 10% China tariff rising to 25% on Friday. Another $325 billion in goods to be taxed. So what's Zero Hedge saying? So much for months and months of constant leaks, headlines, tweets, and press reports that U.S.-China trade talks are going great and are imminent amid an ocean of optimism. Just afternoon on Sunday, President Trump tweeted that 10% tariffs paid by China on $200 billion in goods will rise to 25% on Friday, and that, contrary to what he himself and his chief economist Larry Kudlow has said for months, talks on a trade deal have been going too slowly. And just to underscore this point, Trump also threatened to impose 25% tariffs on additional $325 billion of Chinese goods shortly. So I guess, we've been hearing, even despite the fact that we've had great statistics, right, lately, that the economy is doing really well. We've heard Larry Kudlow, Fed officials, talking about the fact that inflation is low, right? That old joke, inflation is low. What a joke. And that the Fed might cut rates. I think it's all because they know that the stock market is teetering. Doesn't have any more momentum. And I think this could be like an excuse. If the market comes down and crashes, they could blame it on China. Blame it on China. They didn't want to negotiate. They wanted to keep cheating the American public, with their trade protectionism, with their mercantilism. But it's funny because, in the 19th century, I've been reading in this book, War on Gold, that the U.S. had throughout the 19th century, a policy of, tariffs on imported goods. And that's how the American industrial base developed, because it was protected. And the Republicans were the biggest protectionists throughout the 19th century, before the Civil War, after the Civil War. So, but it helped America develop into what it is today. So China's trying to do the same thing. They're not trying to, they're just looking after their own interest. I guess the U.S. is also looking after its own interest. But as I've said before, I think a lot of the imbalances to do with international trade is more to do with the fact that the current major reserve currency, aka the Federal Reserve note, is not an anchored currency. It's not backed by anything. It's so it creates all these problems. The U.S. has had the exorbitant privilege of being able to run unending deficits, insurmountable debt, and have the rest of the world and the American public as well, by the way, finance that because it has major reserve status. I think that's the whole problem that we have. Because other countries, unless they have dollars, they can't function in the world economy. So what are they going to do? They need to try to export as much to the U.S. as possible so they can earn dollars. And that's the whole problem, in my opinion. I don't think negotiating trade deals like this bilaterally are going to solve anything. The underlying problem is the world's non-monetary system. We don't have a monetary system. It's a non-system after the fall of Bretton Woods in 1971. So that's what I wanted to say about that. Let's keep a close eye on the markets and see what happens this afternoon. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Make sure you hit the little notification bell above to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.